Hey everybody, it's Wednesday, the 3rd of August, and this market just keeps grinding higher. Another good gain for the S&P 500 today as it's approaching that prior peak and the year-to-date volume-weighted average price. Yesterday, we were looking for a potential of more slowdown. The most important thing we can do when the market is trending above the rising 5-day moving average is put aside our beliefs that the market is up too much, that it has to correct or do anything. Instead, to listen objectively to the market and give the benefit of the doubt to the buyers while we're above the rising 5-day moving average, just as we gave the benefit of the doubt to the sellers below the declining 5-day moving average. That has saved me countless dollars in the market, not shorting when the rising 5-day with a rising 5-day moving average and not buying with a declining 5-day moving average. So we remain innocent until proven guilty. This is our week to date volume weighted average price. That will be in the approximate same location as the 5-day moving average tomorrow. And again, it just kind of seems like we're grinding higher. It's possible that we break out past this high and then make a slight higher high before turning back lower, or perhaps we continue up to the year-to-date VWAP and experience a correction. Maybe we just keep going. Nobody knows the future. A lot of people talk confidently about what is going to happen. The only thing I know is that if I manage risk and get involved in the primary trend, that's generally going to be the way to make money, regardless of what all the headlines are. The NASDAQ is pushing for that year-to-date volume-weighted average price. It finally cleared with some vigor the volume-weighted average price from the COVID low. That's, of course, the orange one that we've had an eye on. And it looks like we're headed for the year-to-date volume-weighted average price in the near term. Now, maybe it doesn't do it. Again, it's not a target. It's a level of interest that seems likely to be hit. If we get through that, then this little line here where we saw those prior highs, maybe it does one of these types of things where it does this and then distributes and then it falls back down to earth for a little while and rebuilds for a bigger type of move later in the year. We've got this trend line here as well that I just noticed as I was drawing that. It seemed to make sense. It's not something I've been looking at, and when I that's just the way technical analysis is. Some people say, well, when do you know to get rid of a prior volume weighted average price? Well, if you recall, we were looking at volume weighted average price level from this low, but that low is no longer really relevant. We could put it on there and or leave it there, but it just makes the chart a mess. So I don't like to have 100 of them on there. I like to look at it and say, this is the most important low that we've seen. So we're going to keep that one on there on the daily time frame, and on the shorter term time frames, we're going to look at since the Federal Reserve, from the beginning of the week, etc. And again, in this market, we are clearly higher highs and higher lows. This is not a market to sell short. It doesn't matter that the 200-day moving average is declining. And this is why, I always, people always say, well, are we in stage 3.3 or are we in stage 4.1 or stage 4.2? I honestly don't care. That's not what I'm trying to do. I'm not trying to look at this and say, hey, we're still in a stage 4 decline. That doesn't help us as swing traders. What helps us is to recognize these trends. That's what we want to look for and participate in them based on the shorter term action. And it's clearly still quite bullish. The Russell 2000 also higher highs and higher lows above a rising 5-day moving average, above the week to date VWAP, the VWAP from the Fed, and onto the daily time frame. We're up to the COVID volume weighted average price and within spitting distance of that year to date volume weighted average price. The year-to-date volume weighted average price, I'm certainly not going to put a short sale out at that level. It might be the absolute high of this move, but that's not the way I'm looking at them. I'm looking at them as a potential area. Just if you recall back, several months ago in this area, we looked at this level and we didn't just get bearish right there. We got bearish when it broke down. That's the proper time to get bearish. You could look at it in hindsight and say, hey, I picked the high, aren't I a genius? I'm so smart. But the point is, you didn't know that that was the high until after. I want to be involved when I know what the trend is, and then I can manage risk. Right now, on the intermediate term trend, we're still making higher highs and higher lows, and I'm not going to be the fool who sells this short trying to be the hero. This was a potential scenario that we laid out last night. I said that, if it breaks down, if it, corrects further through time and then breaks below the volume weighted average from the Fed, then perhaps we would head down to the volume weighted average price from these lows in this area. We didn't get that. Instead, the market continues higher. The direction of the 5-day moving average tells us we can be on the lookout for potential bearish scenarios, but don't trade the bearish side of the market until you have actual evidence. Had the market done this, then I think, making a short sale right there with a stop above here, that could have made sense. But instead, we continue higher. This market looks like it's also headed for a so-called breakout beyond this high and perhaps test of the year-to-date volume weighted average price. I'm not looking to sell short there. I'll be ready to sell short in that area. Again, if it does what? If it rallies up, does this, and then starts to roll over. I would much rather short here, even if it's $6 lower than the high. I would much rather short here because then on the shorter term time frame, the 5-day moving average is going to look like this, and that's where we want to get involved with a stop above the most recent relevant lower high. That's not what we have right now. We have higher highs and higher lows. Don't be a fool and fight trends, regardless of whether they're uptrends or downtrends. The biotechs finally broke out of that range, and they look like they are now magnetized towards that 200-day moving average. That would get them up to about 132. That's the first level of interest that has the potential to become supply. It's not resistance. We'll know well after the fact if it's resistance. But the good news is this group was the first one to rally, and then it was the first one to kind of just go sideways and digest the gains through time. They didn't experience a large price pullback. Instead, there were still bidders in there, and that's the message to listen to. The bidders were still in there. It held above this prior band of resistance. It held above that volume weighted average price from the low. It held above the volume weighted average price from March 29th, and now we're seeing follow through to the upside. If you're involved in these, time to raise your stop. If not, perhaps tomorrow you can get involved above here with a stop below there or something like that. It's what time frame are you engaged in is the question always. The financial stocks also rallying. They pulled back to this prior band of resistance, and now it looks like it looks a lot like the S&P did here a couple weeks ago that began this move. That the S&P broke this resistance, pulled back and tested it, and then that's day one. Financials broke that resistance, pulled back and tested it. This could be day one of what might end up being a bigger move for the financials. I don't like to trade the financial stocks, but maybe there's a move in here. Let's take a look at the shorter term action. So here in the 15-minute time frame, maybe tomorrow we get something along the lines of this, and then we break some resistance and we put our stop under one of these higher lows, whatever makes sense for your time frame. But it looks like the first level of interest that has the potential to become resistance would be the March 29th volume weighted average price. It's certainly been important for this group previously. The weekly time frame, it's still in a downtrend. Again, whether you call it stage 4-1, 4-2, 3-3, whatever you want to call it. I'm not interested in labels. I'm interested in making money. Energy names did pull back here below that support today. What we had said was if we see a pullback in this area, we don't want to get bearish right away, but if we get trapped below the 5-day moving average and that 5-day moving average starts to decline in the next couple of days, maybe it does this, then maybe there's an opportunity for a short sale that could come down most likely to the volume weighted average price from the 14th where it had that low. If we take a look at the handoff of the volume weighted average price from that test there, this is where we're trying to find buyers. So now if we rally up towards the 5-day moving average and then tomorrow, let's say we get, this is tomorrow's volume weighted average price, then we might want to short here with a stop just above that 5-day moving average with an eye towards a trade to cover at least a good chunk of it down in this general area. The daily time frame, the financial the energy names kind of failed where they were supposed to, in that we had the March 29th VWAP and the uh, declining 50-day moving average in there. Now on the downside, perhaps we're heading in towards this level where we have the 20-day moving average. So these pieces kind of line up together, and you have to say, what's your time frame, what's your risk, what are you willing to tolerate, and make the trade your own.